Auckland's eastern suburbs just recorded something we haven't seen in over 3 decades. In the past 3 years, median house prices in Auckland have dropped 20% from their January 2022 peak. That's roughly $990,000 now, down from over $1.2 million. But here's what's really happening that most people are missing. While the national median sat relatively flat at $770,000 through mid-2025, Auckland homeowners watched nearly a quarter of their property value disappear. And if you own in the eastern suburbs, or you've been watching this market thinking about buying, the next 6 months could define whether you make a smart move or a costly mistake. Because there are 3 forces converging right now that are reshaping Auckland's property landscape in ways we haven't seen since the early 1990s. The first is obvious. Interest rates went from near zero to 5.5% in less than 2 years. The second is the supply surge that nobody saw coming. And the third, that's the one catching everyone off guard. Between 2020 and late 2021, Auckland's property market didn't just grow, it exploded. We saw one of the largest house price booms in the developed world, with values surging roughly 40% in under 2 years. The median price-to-income ratio hit 11.2 times household earnings, 11.2 times. That's not just expensive, that's historically unprecedented for New Zealand. And now we're watching the correction play out in real time, particularly across Auckland's eastern corridor. From Remuera through to the beachside suburbs, from Parnell down to Howick, areas that were considered bulletproof just 3 years ago are now bleeding equity at rates that have homeowners, investors and economists completely rethinking what they thought they knew about Auckland property. I've been tracking this data for months, and what stood out wasn't just the headline numbers, it was the speed of the reversal. Properties that were getting 5 offers in a weekend back in 2021 are now sitting on the market for 47 days on average. That's nearly 4 times longer than the 12-day median we saw at the peak. So in the next 12 minutes, we're going to break down exactly what's happening in Auckland's eastern suburbs, why this correction is hitting this area particularly hard, and most importantly, what it means for your money, your property decisions, and where this market is heading next. Right, so before we dive into the data, let me set some context here. I'm using verified information from REINZ, that's the Real Estate Institute of New Zealand, along with data from CoreLogic, Quotable Value, and the Reserve Bank. Everything you're about to hear is sourced from official market reports, so you can trust these numbers. Here's what we're covering today. First, we'll look at exactly what happened in Auckland from the 2021 peak to where we are now in early 2026. Then we'll break down the regional differences, because not all of Auckland is experiencing this the same way. And finally, we'll talk about what's driving this correction and what the next 12 to 18 months might look like based on current economic indicators. Let's get into it. So here's where we stand right now. Auckland's median house price hit $990,000 as of mid-2025. That's down 3.4% year-on-year. And when you compare it to the January 2022 peak, we're looking at roughly a 20 to 22% decline, depending on which index you're using. Now let me put that in perspective. At the peak in January 2022, Auckland properties were trading at values we'd never seen before. The median was pushing well over $1.2 million in some months. CoreLogic's data shows that by late 2025, Auckland's market had lost approximately 20% of its value in nominal terms. But when you adjust for inflation, when you look at real values, the drop is even steeper, closer to the 30% range in real purchasing power. And here's what makes this particularly significant for Auckland. While the national median house price sat at about $770,000 and remained relatively unchanged year-on-year through June 2025, Auckland's median was still roughly 30% above that national figure. So even after this correction, Auckland property remains significantly more expensive than the rest of New Zealand. But the correction isn't finished. REINZ data from late 2025 shows Auckland's market continuing to weaken. In December 2025, national values dropped 0.2% monthly and 1% annually, and Auckland was leading that decline. The REINZ House Price Index fell 0.3% in November 2025, with sales volumes down 4.8%. Now here's the thing, this isn't just about numbers on a spreadsheet. This represents real wealth being erased from Auckland homeowners' balance sheets. If you purchased an eastern suburbs property in early 2022 for $1.5 million, that property might now be valued around $1.2 million. That's $300,000 in equity that's just gone. Let's talk specifically about Auckland's eastern suburbs, because this is where the story gets really interesting. Auckland built about 18,000 new homes in the past year alone. That's actually a positive development in terms of addressing our long-term housing shortage. Auckland still has roughly 50 fewer homes per 1,000 people compared to other regions. But in the short term, this supply surge hit the market right as demand was collapsing, and here's what happened. Between 2020 and 2024, New Zealand saw an estimated $80 billion of residential construction. A huge chunk of that was in Auckland. New apartment complexes, townhouse developments and subdivisions were all racing to completion to capture those peak 2021 to 2022 prices. The problem, by the time these properties hit the market, the buyers had vanished. See, CoreLogic estimates that Auckland's inventory levels hit decade highs by late 2025. New listings kept climbing while buyer demand dropped off a cliff. Properties that would have sold in days back in 2021 were now sitting for weeks, sometimes months. And when supply overwhelms demand like this, there's only one direction prices can go. The eastern suburbs felt this particularly hard because of the type of property being built. A lot of the new development was concentrated in medium to high-density housing, apartments and townhouses, targeting that $800,000 to $1.5 million price range. But that's exactly the segment where first home buyers got priced out and investors pulled back. And look, investors used to make up nearly 40% of Auckland's property purchases back in 2021. By late 2025, that figure had dropped to around 25% nationally, and even lower in Auckland's apartment market. Why? Tighter regulations, higher deposit requirements, and the fact that rental yields couldn't justify the prices anymore. So let's talk about why this is happening. There are three major forces at play here, and they're all hitting Auckland harder than other parts of New Zealand. Force number one, interest rate shock. The Reserve Bank raised the official cash rate from 0.25% in early 2021 to 5.5% by mid-2023. That's one of the most aggressive hiking cycles we've seen, and while the REINZ has since cut rates, we're down to 2.25% as of November 2025, the damage was done. Here's the math. If you took out a $1 million mortgage in 2021 at 2.5%, your monthly repayment was roughly $4,000. By late 2023, when rates hit 6%, that same mortgage was costing you around $6,400 a month. That's an extra $2,400 a month, nearly $29,000 a year, just in higher mortgage costs. For Auckland buyers, where the median loan size is significantly higher than the rest of New Zealand, this was devastating. CoreLogic's mortgage serviceability analysis shows that mortgage payment burdens climbed 8.7% in the year to June 2024. Average weekly mortgage payments went from $605 in 2023 to $658 in 2024. And nearly 1 in 7 Auckland homeowners were now spending 40% or more of their income just on housing costs. The wealth effect went into reverse. ANZ's chief economist Sharon Zollner described it as a heavy wet blanket on top of the economy. And she's right. When over half of household wealth is tied up in property, falling prices don't just hurt homeowners. They kill consumer confidence and spending across the board. Force number 2, the supply surge. I mentioned this earlier, but let me give you the full picture. CoreLogic data shows that days on market for Auckland properties stretched from 12 days in early 2022 to 47 days by late 2023. That's nearly a fourfold increase. And by 2025, inventory levels were at decade highs with new listings continuing to flood the market. Now here's what a lot of people don't realise. Many of these new developments were purchased off-plan by investors back in 2021 and 2022. They were banking on continued price growth. But when those properties finally settled in 2024 and 2025, the market had already turned. These investors found themselves immediately underwater. Their brand new apartments were worth less than what they paid before they'd even moved in. That created a secondary wave of distressed listings, as investors scrambled to cut their losses. And when distressed sellers hit the market all at once, prices spiraled downward fast. Force number 3, the buyer strike. This is the one that catches people off guard. Even with prices down 20%, even with interest rates now falling, buyers aren't rushing back into the market. Why? Because the psychology has completely flipped. Back in 2021, buyers feared missing out. Now they fear catching a falling knife. CoreLogic's Kelvin Davidson noted that job market uncertainty has more than offset the upward influence from lower mortgage rates. And he's absolutely right. When people are worried about unemployment, when economic growth is weak, GDP contracted 0.9% in Q2 2025, they don't rush out to buy million-dollar properties. Sales volumes in late 2025 were still below long-run seasonal averages, despite the Reserve Bank cutting the OCR by 325 basis points from the peak. That's massive monetary stimulus, and it's barely moving the needle. Why? Because confidence remains weak. Alright, so what does all this actually mean if you're in the Auckland market right now? If you're a homeowner, particularly in the eastern suburbs, you've likely seen significant equity erosion. The question is whether you need to sell or whether you can afford to hold and wait for a recovery. And look, the data suggests we're near the bottom. Most economists believe the REINZ is done cutting rates. Inflation is tracking back to the 2% target by mid-2026, and there are early signs of stabilization, but recovery will be gradual. The REINZ's own forecasts project only about 3.8% capital gain on house prices in 2026. That's modest growth, not a V-shaped recovery. So if you're banking on a quick bounce back to 2022 prices, the data doesn't support that. If you're a first home buyer, this is actually your window. First home buyers made up roughly 28% to 29% of Auckland purchases in late 2025. CoreLogic's Kelvin Davidson noted that conditions have been in their favour, with abundant listings and access to deposits through KiwiSaver. But be realistic about what you're buying into. You're not buying for short-term capital gains. You're buying because you need somewhere to live and you can afford the mortgage payments. With the average mortgage yield at 5.4% expected to fall to 4.7% by September 2026, serviceability is improving. Just don't expect rapid price appreciation. If you're an investor, tread carefully. The Auckland apartment market in particular is still working through oversupply. Rental yields have improved slightly as rents have started to ease. National rents were down about 1.7% year-on-year by December 2025, with Auckland seeing even steeper falls. That means less competition for tenants, but it also means less rental income to service your mortgage. The traditional New Zealand property investment strategy, buy, hold and watch capital gains do the work, that's been disrupted. We've now had 3 years of price declines, which is unprecedented in modern New Zealand history. Before 2020, we'd only seen 2 down years since 1990. Let me bring this all together. Auckland's eastern suburbs are experiencing a housing correction that's reshaped the market in fundamental ways. Prices are down roughly 20 to 22% from the January 2022 peak. Days on market have quadrupled, inventory is at decade highs, and buyer psychology has flipped from fear of missing out to fear of catching a falling knife. The assumption that housing always goes up is dead. If you found this breakdown valuable, hit that like button and subscribe to Kiwi Property Reports. We're tracking New Zealand's housing market suburb by suburb, region by region, with verified data and no hype. Drop a comment below if you are seeing these trends in the Auckland market. Thanks for watching. I'll see you in the next report.